Welcome back to the channel, everyone, and thank you for tuning in to another great video. Let's talk about when we should be exiting our position to preserve our capital. When do we need to cut our losses so that we do not incur any type of drawdown? The key to trading is really getting out, okay, when you know the trade is going against you, all right? You don't want to sit in it, all right? You want to know you have to exit, okay? So sit tight. Watch the intro and we're going to jump right into the video. Now, what I see people do most times is that they are confused about when they should exit a trade. They may get into a trade at a good, entry price level. But the thing about it is that before they get into the trade, they haven't sized up the zone. Where do they need to exit in case the market goes against them? A lot of people struggle with this, especially beginner traders. Okay, and I just want to give you some examples of kind of what to look for, some tips of possibly, what I actually do, but possibly what you may want to do in your own trading to kind of preserve your own capital. Regardless if you have a small account or a larger account. So what I want to show you here on the chart, I don't want to make this a long-winded video, but the market it's going to do what it wants to do. People think just because they got or feel as if they get into a good position that the market can't go back against them. Look, you have to understand one thing, okay? Don't point fingers or blame anyone, regardless of what they've tried to show you strategy-wise, or maybe you went through some course. The thing about it is that the market's designed to do what it wants to do. It's a game of chess, and the institutions are the ones that are driving the market. So they're going to yank the chain. Either whenever they want the market to go up, they're going to make it go up. Whenever they want it to go down, they're going to make it to go down. Trading is a game of probability. You have to understand that. But the thing about it is knowing and playing the game strategically, like a game of chess, so that you can get out ahead. Okay? So what I want to show you here on the chart, this is a chart on my 12 range chart, one of the charts I use as far as entering the market. This is on the ES, which is the mini S&P 500. We see the market moving to the downside, making lower lows and lower highs. Now, this is for supply and demand style traders, okay? Because we're interested in looking at those zones, either supply or demand, all right? All right, and the thing about it is people always ask about stop losses. What are some things that I should do or look for rejection, and when, and the market comes against me, when to get out, all right? So here's an example, excuse me, guys, of a supply zone. I'm going to show you right here. This is a supply zone, okay? All right, so we're moving to the downside. That means we're making what? Lower lows and lower highs. So I'm going to stop right now. If you do not know that, that means you do not understand market structure. You have to be able to read the market correctly, all right? Understand one thing, the principle. Market structure is the most important thing, and price action is king, okay? Meaning market structure, we need to be able to read and understand what's overall going on, okay, to form a bias of which way we need to trade, okay? Because the market, 95% of the time, is either moving in two directions. It's either trending to the upside or trending to the downside, and then the other 5% is moving sideways, right? All right, let's get back to the topic. So the market is moving lower, okay, making lower lows and lower highs. It pulls back, it retraces, okay, to this supply zone. All right, now for me, what I want to see, all right, two things here. This is a high probability zone, I'll say, for one. Why? Because we have a gap, okay, back at the zone. All right, sometimes you may not have that actual gap inside the zone like we have right here. It may be just one big push or one candle to the downside breaking below this green candle right here. So all you have is a red candle that breaks below this green candle, and there will be followed up with the next red candle to the downside, leaving a gap in between the last down red candle and the bottom end of this green candle. So there's a gap. It could be a gap right there, but we have a gap within the zone right here, okay? So that was left behind, okay? So if you don't know much about the gaps I'm talking about, please go back and watch some other videos. All you have to do is on the channel, type in gaps. It should bring up some videos what I'm talking about, or I go into a discussion about gaps in the market or imbalances as well. Okay. But in this case here, When price is retracing back to the zone, what we're looking for, typically what I'm looking for is bullish candles back to the upside. Of course, you're going to have that for price to be retracing back, right? But what I want to see once price taps into that zone is a bearish candle where price has tapped into it and then wicked away from it, okay? I like to see wicks once price taps in the zone quickly at the zone where it fills the gap, and then there is a bearish wick to the downside or a bearish candle that forms, and at the top end is a wick there. So when price starts throwing wicks, okay, the moment it taps into a supply or demand zone, in this case here we're talking about supply, then that's a good indication that the market is quickly wanting to move in the same direction back to the downside. So we tend to want to start looking for shorts, right? So again, in this case here, price pushed up, retraced back. We got to tap in with this bullish candle here. The next candle, what I like to see primarily is a candle that formed red. Bearish candle with a wick, meaning we're wicking away from that zone real quick, okay? And this is fine right here, even though we've tapped into the zone with this bullish candle here, but I like to see the next candle with a red, that's red with a wick on it. But what I want you to be careful with is situations like this right here, is where the market is retracing back. We got a bullish candle, tap to the zone, another bullish candle, which closes above not above the zone, okay, but it closes the gap, okay, back within the zone, and it moves higher than the gap area, okay, or above the gap, all right, and it starts to take out, moves above this bearish candle right here, breaks above it, right? Now we haven't completely broke above the zone, but when you see instances like that where there's a lot of bullish activity, even where price is throwing bullish candles back into the zone itself, and we're not getting those bearish wick candles down to the downside, be very, very, very mindful, okay? Even I am very selective about taking these trades because to me, it's still a sign that there could be bullish momentum or force where the market wants to push higher. In this case here, the market did tap and push a little higher with this bullish candle here. It formed a bearish candle right here, and then it moved lower. Now, I don't take the moment price taps into the zone and I see this bearish candle to the downside. Do I immediately get once it closes? Do I get into the trade? No. I would wait for a second opportunity, a second candle to form, because we're showing so much bullish interest into the zone, which means that typically what I always say is I like to see a break of a candle below, okay, in the opposite direction. Meaning a red candle that closes below this bullish candle right here, okay, for me to take interest in going short. If I said long, I'm sorry, guys. Short. So what we have here is that we got this bullish candle. Did it close below this bearish? We got this bearish candle. God, I'm getting twisted now. This bearish candle, we're waiting for it to close below the bullish candle here. We didn't quite get it on the close of this candle. The second candle gave us the opportunity. So I would be interested in going short at that time because now we got back-to-back two bearish candles that are showing me, okay, there's interest to go short. I'm going to take that trade. That's taking trades based upon probability. But again, I'm going to be very, very mindful because the fact is that where these bullish candles tapped into the zone, all right, and broke strong into the zone, meaning it didn't quickly tap into the zone and wick away, we got two nice sized bullish candles, excuse me guys, that tap into the zone and push through the zone, okay, push deep into the zone, I should say, not through it, but deep into the zone. I'm going to be mindful because this thing could really start to want to push back to the upside. So you got to wait to see, even though we got this bearish candle that close to the downside, I want to see, are we going to get some follow with some more selling, okay? Another bearish candle to the downside. Because what could typically happen is you could get a break below, you could get a bullish candle that closes here, and even possibly a break below this area right here with the next bearish candle, right? And then the market would turn back around with a bullish candle to the upside. So what I'm saying is, if you see things like that, to where you have bullish activity, strong, deep into the zone here as it did, and then you get a bearish candle to the downside, okay, we got some selling, and then you get another bearish candle to the downside. Now we've broken below this bullish candle here, all right? Again, most times I'm in that trade, right? Okay, but I'm being mindful about this area here and the situation that's unfolded because of the strong bullish interest into the zone where we move deeper into the zone. So we get two bearish candles. One breaks below. We get the break of the candle in the opposite direction with the full body close to the downside. But what could happen here, the market could do something like this. It could flip back around, throw us another bullish candle back to the upside, okay? And if you see something like that, be very mindful. To protect and preserve your capital is what I'm trying to say is, if you see that happen, then you may want to think about going ahead and closing your position, okay? And I know sometimes this could be just a strategic move done by the institutions to stop traders out, because they're always stopping or what I call shopping for stopping traders out. They're looking for either buy or sell stops, okay? All right. In this case here, they would be interested or looking for shopping stops at the top end here, right? Because people would have taken interest to go short here, so they would be shopping for stops above this area here. Yes, the market could throw a bullish candle to the upside here, take out this bearish candle, still be within this zone here, the supply zone, and then turn back around, okay? So people get stopped out like that, but it's better to get out of the trade and protect your capital because, people always ask, where should they put their place of stop at? Now, I've talked about being conservative when it comes to stop losses. And, when we trade supply and demand, most traders like to put their stop at the back end of an area. In this case here, supply. So you'll put your stop loss a couple ticks above 43, 44, right? Okay. If you are more aggressive in the style of trading, but if you're conservative, let's say you got into the trade, you're waiting for a rejection right here in the zone, and then you got into the trade with the bearish break below, close with a bearish candle below this bullish candle here, you're going to put it maybe right here at 42, 43 area, okay? So, you're preserving your capital by a few ticks in case price was to turn back around right here, okay? You're still maybe at break even at this point here because price has not ran your stop right here. So if you're conservative with getting in and getting out, okay, and you've gotten in, say somewhere, well, let's say you got in right here, because more likely you got in the break of the candle right around 39, right? And then that next candle that turns back to the upside, that bullish candle, it throws back into the actual supply zone here. So maybe it runs back up to like 41, right? And let's say you have your stop loss sitting right here because you're conservative at 43, right? So you got in at 39 and then you turn around and got out at 40, say 41. Well, you lost 2 points, right? But you actually saved yourself because your stop loss was sitting maybe right above this area. Let's say here at 43, maybe possibly 44. You saved yourself 4 to 8 ticks, additional loss, right? Because you got out the trade quick enough. And then, it does get frustrating because the market could go up here, throw another candle or so, break right above here to stop these sellers out right here, and then go in your direction. But that's the game that we play in this business of trading because, you have to know when to preserve your capital, protect it, and get out soon enough. All right. So basically what I'm trying to tell you is that there's ways to protect yourself from getting out of a trade quicker than allowing it to run and hit your stop. All right. Now, even if price, you had your stop at the back end here, say 44 or 45, and you got out at 40, you got out right here at 41 or 42, still you saved yourself several points of more loss of capital, okay, by getting out early because you saw, okay, this thing is broke deep into the zone here with these bullish candles here. There must be some interest to continue wanting to go higher, but then it does what you want to see it do, reject, and then turns back around a bullish candle back to the upside. So I'm just telling you, what I'm trying to say is be very mindful of situations like this where the market is really tapping back into a zone, deep into the zone, strong, okay? Either way, this case here, we're talking about supply zone, so if it taps into it with bullish candles, then there could be interest of wanting to go higher. If in reverse, if it taps into a demand zone, pulling back into a demand zone with bearish candles deep into the demand zone, be careful there because it may want to have interest to continue pushing lower, okay? So that's what I'm trying to say. This will help you. It's up to you to make that determination. Should I get out if this market was to turn back around after the break of the candle and taps back into this, again, to the zone with another bullish candle? It's up to you. You can weather the storm to see if they're going to come back up here and hit these stops above here and then want to push lower. You got to figure those things out for yourself, okay? But I just want to kind of give you a little bit of maybe a tip, a little hack that maybe will save you and again help you preserve your capital in situations like this where the market pulls deep into a zone and we're not getting. I talked about this before, where the market taps into a zone and it wicks away real quick. That's the kind of stuff I'm looking for because the moment it taps into that zone and it starts wicking away real quick, or we get a wick right at the zone, its first tap, meaning We get a bullish candle here, and then the next candle that forms to the downside is a bearish candle where it wicks. The next candle wicks right here at the zone and quickly moves away. I'm interested in that. Or we get a bullish candle to the upside here, and it doesn't close. The body of it doesn't close into the zone, but we get a bullish candle to the upside, and a wick taps into the zone. So we get a bullish candle that wicks at the zone, and then the next candle we get is a bearish candle to the downside. So that's a strong indication too that the market is, looking to continue moving in the same direction to the downside here. So here's an example of exactly what I'm talking about here. We get a breaker structure to the downside. Okay, the market pulls back. All right, to this area right here. All right, now look what happens here. When it taps into the zone here, the supply zone right here, what do we quickly get? We get a tap into the zone with a bearish candle. Okay, you see that? This bearish candle taps into the zone, and the wick of that bearish candle lets us know that there's no bullish activity into the zone. There's no candles that are bullish that move deep into the zone. We get a wick of a bearish candle that taps into the zone. The body turns to the downside, and then we get a quick move away from it. Okay, so you have to pay close attention to things like that. We're getting lots of activity. In this case, in cases where we have supply at, bullish activity back to the zone or inside that zone. Okay, be mindful of that. All right, or are we getting a tap into the zone with a wick of a candle and then get rejection down to the downside? That's the best thing we want to see, is that what we're seeing, wicks of a candle tap to the zone and then the body's moving away from it. Okay, it could be even a bullish candle. This could have been, right here, this bullish candle right here could have been the one that tapped into the zone, and the body of the bullish candle here started moving away from the zone, showing direction where it was moving to the downside. Okay, so look for things like that. So overall, what I'm saying is, candles that move into either a supply or demand zone, okay, we want to see the ones that where the wicks of those candles tap into the zone and quickly move away from it. That's just more indication that the market wants to continue moving in this overall direction, in this case here to the downside. So, but when we see that activity where the market starts breaking into the zone deep, okay, example, if this was a supply zone, which it is, bullish activity, more candles tapping into the zone, I'm going to be very mindful, because I'm not sure if this thing's really ready to move to the downside yet, because it's showing me strength still to the upside. So be careful with that, because again, they can show bullish activity to the upside, throw you for a loop by breaking lower, where we get the break of the candle with bearish candle to the downside, just to push the market back up with another bullish candle tapping into the zone. So, and then we break higher. That could happen. That truly could happen. So if you see things like that where it turns back around, we're already deep into the zone, breaks into with these bullish candles, and then it breaks lower and flips back around with more bullish candles to the upside, you may again want to think about exiting the position, the trade, just to preserve your capital and kind of wait and weather the storm to see what's going to happen next. Okay, yeah, you may incur some small loss, but versus letting it hit your full-on stop, okay, and losing more money, at least you're just again securing your capital and not having to worry about taking on much drawdown, if any at all. I always talk about cutting your losses earlier so you can preserve that capital and be able to live to see the next trade right around the corner, okay, and wait for the next setup. So I just want to share this with you guys, and hopefully it makes sense. Just look for those, what makes zones more high probabilities, where you get the wicks back out of zone and then it moves away from the zone pretty quick, okay? Those are, to me, like the best setups, the ones that are showing, that there's still strength in that opposite direction. In this case here, wicks into the zone, and then it breaks away real quick to the downside. That's showing me still strength to the downside. So anyways, I just wanted to kind of show you that. If you're interested in joining the Discord community, find that link down in the description portion of this video. Okay, there's a link down there. Invite yourself in for free. Also, if you're not a current subscriber, guys, I don't know what you're waiting on, but go ahead and click on that sub button down below right now. Go ahead. I'll give you 5 seconds to do so. All right. And then next, what I'd like for you to do is just go ahead and make sure to turn on, or you have turned on, all your post notifications so you never miss one of the uploads here on the channel. Last but not least, the most important thing, please drop a like on the channel. I appreciate each and every one of you that tune in when I post these videos, because I'm truly trying to help individuals out And I know everyone wants to, wants to be a trader and figure this out. So if you trade supply and demand, here's another tip. All right, take care. See you in the next one.